Hi everyone, so welcome to Investing for Value. So today I'm going to talk about Euronav's first quarter report. The revenue for this current quarter was 416 million, up substantially from a year ago of 232 million. Voyage expenses was down from 37 million to 32 million. Vessel operating expenses stayed relatively similar, around 54 million. General and administrative expenses was down from 19 million to 16 million. Depreciation was slightly down at 82 million, and you also have to remember depreciation is a non-cash expense, so add depreciation to the profit figure and you kind of have the amount of disposal finances that they have at their disposal. And net finance expenses was 21 million, down from 23 million, and it just kind of shows how large the debt situation is, though still very well, still manageable in this situation, especially with their huge profits. And the big reason for their very large profits is the increased rates. So for the very large crude carriers, spot rate was 72,750, up more than double from last year at 35,000. There is also time charters, which are more long-term contracts. They were 37,000, up quite a bit from 27,000 last year, though nowhere near as high as the spot rates. And the same thing with the Suezmax. The spot rates were 59,000, up more than double off last year when it was at 27,000. And time charters was slightly down from last year when they had 32,000. They were only getting 30,000 on average this quarter. And overall, if we look at these rates here, remember the very large crude carriers are 72,000 and Suezmax is 59,000. And they talked about their quarter two rates. And for the very large crude carriers, they were getting 95,000 per day. And for the Suezmax, they're getting about 65,500. Now I did the math on this, and it roughly translates to about 100 million in extra revenue if they can maximize most of their days. I was a bit more conservative with their very large crude carriers fleet. They have 48 very large crude carriers, and I only use 30 of them on the higher rate, so it's potentially it could be even higher. But we will use the figure of 100 million, and if we add 100 million to this, they would be over 500 million in revenue, and over 300 million if expenses stay relatively similar. They would get about 300 million on the profit side of things, which would be very impressive. And if you thought this quarter was impressive, wait to quarter two. And they're also paying an 81% dividend, which is amazing, especially when you consider that they paid a 29-cent dividend the prior quarter. And also when you consider the share price is $9.63, and an 8% dividend basically translates to around 8% for just one quarter. I thought DHT's dividend was very impressive, but now Euronav's just blows it out of the water. And also at the current market cap of $2.1 billion, they're earning more than 10% on their market cap, especially in their profit figure, never mind when you add back the depreciation and you look at their cash flow figure. Now I just have one last thing to look at, and that is just their balance sheet, just to make sure everything is relatively good. And they just seem to have just kept it right at the bottom here. So overall, I looked at assets, and assets seem alright. Overall, relatively similar, nothing to worry about. It's just more on the debt side of things that it actually looks slightly better, because a year ago debt was 1.173 billion for bank loans, and today it is 955 million, so quite a decrease from that. And everything else stayed relatively similar. There was an increase in the current liability side of things and other borrowings. It increased from 139 million to 164 million. Though in the scheme of things, debt side of things was down quite a bit. So not only is this company paying down debt, paying a huge dividends, and looking at a very, very impressive quarter two. Yeah, there's just nothing to complain about in terms of this current situation. I don't know what a stock price has been hitting down lately, but hopefully things do change and the share price gets re-rated in a substantial way, because even at an increase of 8% in the stock price showing $10.42 in the pre-market, I think it belongs so much more higher, though, we can see if this will be justified in time. Until then, if you have any questions, just let me know below, or I'm always happy to hear about your perspectives. It always helps me balance mine. And until then, good luck investing, everyone.